This is episode 8 of ICT's 2022 video notes, his mentorship. So this episode is institutional order flow to Forex markets. So as you see here, we have Euro JPY on the daily time frame. And let's just zoom in a little bit. Here we have equal lows and they got swept here. Usually price will just, create a high, get broken, and then you have a fair value gap. But for yen pairs, you seem to get a double return often, which is why stay away from yen pairs unless you enjoy this. But for me personally, I don't trade yen. So you see price came up, created this high, came back down again for a double return, and then broke market structure here, which is also, this technically would be the displacement high. But for me personally, I like to use highs or lows that are formed inside liquidity. So you see here, came up. This would have been a displacement high, but in this case, we have a double return. So here is the break of market structure and also a displacement high for me and then displacement low. So in here, I'd be looking for a fair value gap. Price created buy side liquidity, comes down, enters the fair value gap. Boom, you can buy from here. This is a daily time frame, so it is just used for bias. No entries on the daily. And you see price came up and targeted this buy side liquidity. So you would basically be in a bullish scenario once it hits the fair value gap. So what fair value gap to use, it's up to you, but personally, like I said, I use this as the displacement high and low, and this one just happened to get hit. So what we can do now is head on to the 5-minute time frame. So actually, let's head back to the daily. So on the daily, this I was supposed to do go onto this candle on a lower time frame, but price is way ahead, so I cannot go on a lower time frame. So we're just gonna use a different example. And pretend that it was February 10th or February 8th. So what we can do is go to the 5-minute time frame. And so this video, the video note, the video kind of basically just went over what times are best to use and stuff like that. So it would be from here. So from 4 at LA time, 4 to 7. So that is near your kill zone. So if I were to put on my kill zones, you would see right here. From 4 right here to 7 is New York kill zone, and that's the kill zone that you should be looking for this setup to form the market shift model. So you see here we have the sell side liquidity gets taken here, comes back up. Now the high is formed. This technically would be your displacement, but see, it never got broken, but it did come back down, and you got an entry on a lower time frame, which I'll show you. So this is why I say the high that's formed inside is what I call my displacement high, and I'll be looking for a fair value gap in here, because if not, you'd be waiting and you probably wouldn't get an entry. So let's head on to the 1-minute time frame. And you'll see the reasoning for why I had the fib there in just a moment. So again, remember, we're bullish. So yeah, right here. So right here, this is a pair. You see south side liquidity was taken right here. Ignore this line, it's for SMT divergence. So you see, came down here, took the south side liquidity, came up. This would be my displacement high. This right here for me would be displacement high because it's formed inside the liquidity. That's just the rules I follow. So from here to here, there's a fair value gap. Yes, one right here. Now, if this was your displacement high, it would have got broken, yes, but you would probably use this. And for me, I see it more likely to come in between this range. And you see here, fair value gap, entry there, stop loss below the low, and you just target this as a partial. And how do you know, right? How do you know where you can have a target? Let's say this wasn't really there, right? There's not really anything that I see there that's valuable as a take profit. What you can do is from the day starts for me 2100. So the day starts right here, 2100 for me. This is the market day open, right? So you go from the alt, basically the major swing low that started the price one. It could be here or here or here, but whatever started this big price leg, whatever before the most recent swing low. So in my case, right here, and you would place a fib from there to the high, which is up here. See right here, and so you place the fib from the low to the high. Opposite obviously if you're on a different scenario, if you're on a sell, like on a bearish scenario, then it would be from top to bottom. And then my standard deviation is -27, so that's where I would be aiming for. And if you see here, right, if I place this fib back above like the high up here, from the highest to the lowest before the day starts and ends, you can see price comes right to the pip, pretty much to the -27. You can take price a little bit early. I mean, you can take profits a little bit early. Just -27 is what I typically aim for. So the next deviation, standard deviation above this, basically, that 0, and that'd be a take profit. So yeah, and then if for example, let's say you're bullish, right, and you want something to support that you're bullish, you have SMT divergence, which I went over in the previous video on the other video prior to this. We went over that real quick, and if you see here, right, let's just say we're taking the trade on the 10th, right, we're bullish. The 10th, we're bullish, and we're Euro JPY. So what we can do is type in 6E, which is the featured pair, the features pair. So like I guess you can say like think of it as like the Dow or something like that. Like it's just the main pair. So 6E is the features pair for Euro, and like the worth, I guess. And you can see right here, this is the 8th. Price is, we're hoping the price would head higher to sweep this high. So we're bullish on the Euro. Now if we search up 6J for the yen, so 6 plus whatever letter. So if we're trading AUD USD, we would type in 6A, and we would just look for AUD USD. So you see right here, the 8th, we're hoping price would come down and sweep this low right here, which it did. So that means the yen is weak. So if we go to Euro JPY, we know that our bias here to go bullish, let's just use this example again. We'll just use this example because either way it would have worked, and it worked here as well. So our bias is bullish. So we know that the Euro is strong and the yen is weak. So since Euro is the first pair and it's strong, that means we're likely to go up, and yen is weak. So it's pretty much like extra confirmation that price will head up strongly, because if the Euro is strong, the main pair, then the odds of it being bullish is very high. And if the yen is weak, it just correlates that, like, okay, we know that higher prices on Euro JPY is bound to occur, and that's kind of confirmation. As for bullishness and bias, you can do this with indices as well. So for indices, you'll use the DXY, US 30, and S&P 500 and NAS 100, whatever, so the Dow and stuff like that. And yeah, that's pretty much it. This is what episode 8 went over. So again, if you're looking for, let's say, two pairs like Euro or AUD USD, say this, right? We'll type in 6A, and here it is. You would see the Australian dollar futures. So this would be like the main pair. It would basically be like the main currency for it. So if we're looking for a buy on AUD USD, and this is 6A is like strongly, like it's going up, and then 6E is going down, that would mean that Euro is weak and Australian dollars is strong, which we can basically take a long or look for a long, because price will be bullish for us. But also keep in mind market structure and everything else. And yeah, that's pretty much it. That's all the video pretty much goes over. And hopefully that helps. And yeah, so like I said, for me, I look for lows to get taken and the swing to get formed inside liquidity, and that's my displacement high. And then my displacement low is the lowest point it was, and then fair value gap, whatever one's inside, is the one I take. If it has SMT divergence, 1% risk. If it doesn't, 0.5. And that's just my trading plan.